So, guys, the question here is what makes a person chooses to choose to invest in a specific exchange over the other? For instance, what makes a person chooses the U.S. The New York SE over Canadian stock exchange, or what makes a person chooses to invest in Germany over France, or in Britain over Germany, or even in China, which is a rising star currently. So, how can I choose between these exchanges? Should I choose to invest in Chinese stocks, or American stocks, or British stocks? What makes people are attracted to specific countries over the other? So there are multiple criterias, and one of them is the market capitalization. And market capitalization means the total companies listed on this stock. If we sold all of these companies and sold all of its shares, so how much is the total amount US dollar amount we are going to have? Okay, so if I went to the United States, for instance, and sold all of the companies there, and sold all of liquidated all of their stocks, how much is the aggregated amount of dollars I'm going to have? That's it, 65.282 trillion US dollars. This is for all of the US stock exchanges, whether if it's New York or Chicago or Nasdaq. All right, so all of the companies listed on any exchange in the United States worth this, and that make it ranked number one. In the second rank comes China, with 9.9, which is there's a huge gap here between number one and two. But the gap is not that big between two and three, and three and four, and four and five. It's smaller and smaller. But the gap between the U.S. and the any other country is huge. The United States, then China, then Japan, then India, then the United Kingdom, Canada, France, Germany, Switzerland, Saudi Arabia, Taiwan, Australia, and the list goes on and on. On the Wikipedia, there is a similar numbers, but with a small discrepancies, not very huge. Like the United States here 62, and here and this website, which is companiesmarketcap.com, is 65, and so on. So here on the Wikipedia, you can see all of the companies listed. All right, all of the countries, all of them, 113 country. So a few number of countries have no stock exchanges, but the majority of countries have stock exchanges. Like the African countries, many African countries don't have any stock exchanges. But the question I'm asking, why not choosing this African country, for instance? Why not choosing this and not choosing to invest in USA? Right? Or why choosing USA, not choosing, sorry, in Africa or in Europe or China? What makes the USA number one, China number two, Japan number three, India number four? What make it like that? And okay, there is there, but beside the market capitalization, there are other criterias. One of them is the number of the listed companies on each stock exchange. And in this case, I have found this website. It's a very interesting website, theglobaleconomy.com. Very interesting. Okay, many surveys and many statistics are found here on this website. It's very useful. And I have found another criteria, like the number of the listed companies in any stock exchange, and comes in number one is China, 11,497. USA's number two is 4,662. Is a huge difference, by the way. So the United States beats China badly by the market cap, but China beats the USA badly with the number of the listed companies. It's a huge difference here. China, USA, Japan, Canada, South Korea, Hong Kong, India, Australia. The rest of the the list makes sense, but the first two countries only is very weird thing to find that China beats the USA with this massive gap between them, 11,000 and 4,000. And on this list, you will find 70, the first 70 countries. What other criteria can we find in addition to the market capitalization and number of listed companies? Um, Capitalization as a percent of the GDP. Okay, let me see here. All right, this is very interesting. Hong Kong number one, Iran, South Africa, Switzerland, Saudi Arabia, United Emirates, USA comes number seven. I don't know where's China here. China number 25, Germany number 32. Right, and these are according to 2022 here. It's not updated since 2022. Okay, what else? The turnover ratio. Okay, China comes number one, Turkey, South Korea, Brazil, Japan, Vietnam, Canada. Right. Um, what else can we check here? Volatility, interesting also point. Venezuela, Argentina. Okay, this is a little bit um, um, deceiving criteria because the volatility is not always a positive indicator for the stock market health. Sometimes it's a deceiving indicator because when the volatility is too big, it may cause investors to flee. So let me check where's China here. And we see that the top of this list is Venezuela, Argentina, Bermuda, Brazil, Namibia, Greece, Chile. Not very big c- countries and not very reputable. Uh, Let me check on the United States. Okay, United States is not here probably. Let me check. Okay, United States number 15. Let me say check on China. China is number 51. So the number of China is 18. The number of the United States 24. Let me check the UK for instance. 28. Germany number 19. France is number 18. So that's why I'm telling you the volatility is not always a great thing. The best countries are the countries in the center. Okay, not in the top, nor neither on the top near on the nor on the in the bottom. The middle is going to be. So this is a very interesting website. You can check it. You will. There are a lot of statics here, very helpful. But but the question here also, okay. I said to myself, okay, how can AI help me in resolving this dilemma and answering the question? So I went to Google Gemini and I asked it how market capitalization affects my choices for the stock exchange globally to trade on. And they asked it with a very good answer here, but it was very general. Then it told me, I found something here that told me, okay, I have put together, the Gemini is Google's telling me, I have put together a research plan. If you need to update it in any way, let me know. So they made a research for me, and I've told it, I wrote here, I don't know where the sentence I wrote. I just typed OK and pressed enter, and I have found that it took me to this interesting research. It's like something like 10, 15 pages. So I wrote down the key takeaways, and the key takeaways are these. First, risk and return profile. A well-established inverse relationship exists between market cap and both risk and return. In other words, risk and return profile as well established inverse relationship exists between market cap and both risk and return. So the higher the market capitalization, the lower the risk you are going to be to face in as an investor in the market. So the United States capitalization are the biggest, so lower risks you are going to face. Okay. Second point, liquidity and trading volume. Liquidity refers to how easily a security can be bought and sold without substantial impact on the price. So this is going to also to cause liquidity, and liquidity is very important. I don't want to be stuck in the market for too long. If I decided to sell and take my money back, okay, I want a liquid. I want to find the buyer once I decide to sell my stocks or my shares. So in a big market, like massive market like the US or the or China or Western Europe, it's very easy to find a buyer it's a matter of moments to liquidate your assets and take your money back if you decided to, and this is a very important point. Third, information and transparency. The level of publicity available information about companies also directly related to its market cap. Large cap companies are typically transparent with an abundance of companies' financials, independent research, and market data available for public view, and vice versa for the small companies. If there is a small entity or a small stock exchange, you're not going to find too many information about it. So from one side, talking about Nvidia or Microsoft or Apple versus XYZ company listed on in African stock exchange. So the gap of information is going to be massive. All right, global exchange and landscape by total market capitalization. At a micro level, the total market capitalization of a stock exchange is the aggregate value of the companies listed on it. This figure is a widely used benchmark for measuring an exchange's economic significance and its standing in the global financial system. The minimum lot size of a minimum of a number of shares as an investor can trade it in a single transaction is another crucial factor. The New York SE, for example, uses a standard lot size of 100 units, while the SGX, which is Shanghai, previously had a much larger lot size of 1,000 units, later reduced to 100. A smaller lot size lowered the minimum investment needed to trade. Okay, did you got it? Which can simulate greater trading activity for small retail investors and consequently increase trading volume and liquidity. So that the smaller lot size can be okay. The larger amount of investor can enter. So if you have few thousands, and you would like to enter buy a share, you can do it if the more the lot size is smaller. Okay, regularity oversight and investor protection, the breakout of trust. In other words, this means the rule of law. So if you are trading in a third world country stock exchange, and let's say there is a very prominent company there, and it's the Bitcoin of that country, you are going to change $1 investment is going to be $100. It's a great chance. But are you sure that they are going to let you go with your money? This is a very important point and pivotal point to think about. And these are the main takeaways out of the research. There is something else here in the Gemini. I'm going to try it for the first time. Deep research. Let me press on it to see what's going to pop up in front of me. Get in-depth answers. Well, I don't know if nothing here has popped up in front of me, but this is the research they gave me, and that's a very good research. Actually, I love it. Uh, the AI is getting developed. I didn't know that they are making researches at the moment. And by the way, this is the very basic version I'm using. 2.5 Flash 2.5 Pro upgrade to Google AI Pro. It's the very basic version that helped me to receive this great research. Um, and that's it for this video. I was talking about the criteria on how to choose the exchange that you are going to invest on. I've said that the market capitalization is the most important criteria. The rule of law in the country, volatility has to be average, not very high, not very low. Also, what else have we? Number of listed companies in the list. That's it. And thank you very much for following. Did you see how helpful these videos are? Don't forget to subscribe. There are a lot of interesting videos coming in the future. So make sure to subscribe not to miss any information. And thank you.